everybody, welcome to your Thursday Plus edition of the TraderMerlin Show. Wow, I guess I could have done a service to all of you and brushed my hair today. Welcome to our show. It is, I call the Thursday Plus edition because no show tomorrow. We are going to do a quick little wrap up of what happened this week and talk about our overall markets, maybe even touch on utilities for the second day in a row being a leader as far as a market segment in the S&P 500. Now, I wanted to have some fun with the graphics. I know you guys all kind of enjoy the AI art we use to start these shows and our thumbnails on YouTube. So I took a picture with this shirt on today of myself going like that, and this is what AI generated. I thought you guys might appreciate that. It put on a few pounds. Apparently, I have some chest hair now, and the hairline is receding more than I thought it was. So that's my Easter picture. I did manage for it to give me a couple glasses of whiskey, which I was pretty happy about that. But here are some of the other candidates that came through. That was the original picture there. You got the Easter eggs off to the side. I kind of like this one with the two little rabbits hiding in the background. That was kind of cute. And each one, just so you know, that's what AI's interpretation of this shirt is. So like in every picture, the AI really does something crazy and different with my shirt every single time. Let's see what I have for the next one. There's another one. This one slimmed me down just a little bit, but those evil rabbits, it looks like a taxidermy job gone wrong in the background. And then the last one, there's no rabbits, but I said, give me something with Easter pastels, and that's the picture that it gave me. Apparently, I've got a big schnoz, and I look really sunburnt in this picture. So anyway, as you can see the glass in the picture, it is Friday. It's my Friday, so cheers, everybody. Hope you had a great session out there. It did make me look pretty darn happy, didn't it? I am happy. Why wouldn't I be happy? Life is good. All right, we're going with the Basil Hayden today, so enjoy. I hope you all have tomorrow off for Good Friday. Okay, where to start? We have so many different things to talk about. I guess I would be more important to check out the economic data for this week. So what was interesting from an observation perspective is what happened from a numbers perspective this week. As we know, most of the major market indexes finished fine for the week. I'll bring up the charts here. We'll switch us over to a weekly. So when you look at the last candle, that's what we did for the week. So you can tell here, crude oil, big jump up and pretty much just stuck there, didn't do anything after it gapped up. Okay, that's fine. But let's start at the bottom here. I'll work our way up from the bottom to the top. Bitcoin was down 0.85%, but notice this last candle, pretty much just kind of sideways, not really anything major. Actually, the last 3 weeks have been somewhat lackluster for Bitcoin, which I'm okay with. It was only down 0.85% today, closing at 28,145. You had gold, a great week, right? Today, down 0.6%, but all in all, a nice big green candle. So looking positive for gold. Crude oil, again, we looked at that one, had the big jump up. And then a spinning top formation on the weekly. If Bob Dunn was with us, he might be looking at that going, hold on a second, that could be a reversal. Dow also posting a positive week, tapping in both of those supply zones, but reacting more to that upper supply zone, which on the weekly goes all the way back to that February 21st big red candle there, which pushed things down. And now we revisit that one. Again, we'll have to wait and see what the follow-through is like, but markets were fairly resilient today, I thought. Top three for the day, Russell 2000 was up 0.06%. It's the only one that really has a very bad weekly candle. It's a giant red candle. I'll put some numbers on it just so you all have a perspective of what it did. It was down on the week 2.7%, even though today it was up just a little bit. S&P is your silver medalist, which was technically down, even though it looks like it's a green candle. It is down because of where it closed last week, but only down 0.16%. So that is your second weakest performer on the week is that S&P 500, but still up on the day, 0.33%. And then brings us to the NASDAQ, which had a nice little about face today. We started off fairly negative and then worked its way into some positive territory. But a red candle nonetheless, and that was down 1.04%. So Russell, really the ugly one out there from a chart perspective. Crude oil looking pretty good as well. But what was driving all this? I guess that's the big discussion. And I've been circling a lot more around the economic data. So let's just real quickly glance through here. If you run through the numbers, NASDAQ number one for the win. Yep. Spinning top was not visible. Let me go back and check that. Anyway, let me run through here real quick. You had on Monday, our ISM manufacturing numbers came out. And only reason I'm bringing this stuff up is what I noticed was a preponderance of bad economic data this week, yet our markets didn't react that badly, right? We'll start things off, as I mentioned, with that ISM manufacturing number, which came out on Monday, as well as the manufacturing prices. That's a PMI. Notice that both of those were worse than expected and worse than the previous month. So I'll keep a tally here. I had two decent negative pieces of information come out Monday for ISM manufacturing PMI as well as ISM manufacturing prices. You also have the final manufacturing PMI come out just slightly worse than expected, but that wasn't that big of a miss. One that is noteworthy here, construction spending. They expected there to be a contraction in construction spending from 0.04% or 0.4% to 0. Well, we actually had a contraction, and this is going into the summer months. This is not when you expect to see construction spending declining. You would expect to see it rising given those summer months and more people building onto their projects because winter has subsided. So that's already 4 pieces of negative information. Let's scroll down to what we had for Tuesday. JOLTS job openings. Now, this is still a pretty high number, 9.9 million, but it has declined. So that's your 5th negative piece of information, as it looks like you're seeing a weakening environment with JOLTS job openings. But again, that's not the most important piece of data. I got 5 negative pieces now. Factory orders were expected to be negative 0.4, came out at negative 0.7. Again, bad piece of data. It's like almost everything that came out this week looks fairly negative. You go to ADP non-farm employment change, which happened on Wednesday. They went from 261 to 208, right? Expecting a contraction in jobs in non-farm employment. Well, we came out at 145. That's your 6th negative piece of information out there. Trade balance, that's okay. Your final services numbers and ISM services numbers all missed and were worse than expectations. We scroll down here to Thursday, which was today. Unemployment claims, slightly higher than expected. Then you had the natural gas storage. And tomorrow is the big stuff here, which is average hourly earnings, non-farm employment change, and the unemployment rate. So, it leaves you scratching your head a little bit going, like 6, 7 pieces of bad economic data out there, yet the markets really didn't sell off that much. Actually showed a bit of strength, in my opinion, considering what was facing it. And we could all speculate about what that's going to be. For me, I'm not so concerned about it. It's just, I feel like there's this day of reckoning that's going to be coming if that economic data keeps getting worse and worse and worse. Now, a lot of people have been asking about this. I'm just going to address this question. You guys know I hate these topics right here, which was Grant says, what do you make of all the Trump stuff? I don't care. It's a circus. I don't care whether he's guilty. I don't care whether he's innocent. This is all pomp and circumstance that I could care less about. So that's all I'm going to say on it. It doesn't make a difference to me. What I do know is because it's going on, there's going to be both sides riled up here. And how does that directly impact the financial markets? I think it just creates more volatility on an intraday basis. You'll see a lot of wild swings based off this press conference or this person saying something, and that's pretty much all I'm going to be looking for. It's just a soap opera that it's not going to impact my life either way, so I could care less. I'll leave it alone. So there you go, Grant. That's my quick little answer one. We're on live on one screen, Masters on the second. It is the Masters weekend. That's right. I guess Tiger's not doing so well. Let's see, KF. Do you see an opportunity to short Bitcoin for a quick day trade when you look at the 4-hour chart or even the daily, if that's your preference? So we talked about Bitcoin quite a bit recently. Let me go and just show you the spot. I don't want to look at the futures. I prefer the spot market there, which is right here. If you look at this picture, KF, I think you could go either way, but I'm going to modify this yellow box just a little bit to incorporate the most recent bodies. I would personally say until it gets out of that yellow box, I wouldn't do anything. And that's just me because I'm trying to reduce my risk exposure on whatever it is I'm trying to do. And really for 2-3 weeks, Bitcoin has just gone sideways. It really has not done much at all, which is fine with me. Just don't tank and go back down to 16,000 or 10,000. So would I want to short it here? Personally, no. I am a believer of pressure, of the way that price formations happen and what could possibly happen here. I'll let you guys answer this question. What pattern do you guys see on this Bitcoin chart? There's a pattern that's loosely forming, but it really, yeah, exactly. I agree with you, Edwood. F politics. It's a horrible thing. You get. One way to ruin friendships is to say, hey, I'm Democrat or I'm Republican. Pick a side and you're going to alienate half your friends. So why bother? We're all here on the same planet together, so who cares what political party you're aligned with? Let's just be traders and be good people to each other. What pattern do you guys see here? I mean, this is a very strong pattern that I think has a higher probability, as Pepe says, flag formation probably breaking up. A bullish flag says less. Excellent, thank you. Yeah, and the reason for that is you have this big impulse move. Now, this is debatable. Is where does the big impulse move stop? Like my gut wants to draw it to here, but that's not right. Right? If you look here, that is your impulse move up, this huge surge. And then as Tom says, yeah, in the past 3 weeks, we've been just sideways. So what a lot of traders will do is they just wrap these lines across the top, and they'll go, okay, it actually almost looks like it's ascending a little bit. Oops, come on, Merlin. You know, you have a flag formation. Why are you not moving? There you go. Oh, it's on snap mode. Sorry. Doodling while you're drinking whiskey. Not the best thing to do. So you could do that. You could also draw a parallel channel from there, but you get the general sense that prices are holding. And typically, if that happens, you'll see this thing break to the upside. Now, there's no guarantee of anything, but to KF's question, would I want to short it? Personally, I would not, because I feel like knowing the way that these things work, you'll go short and all of a sudden it breaks out and then it has a monster move up to $50,000 and you're short. So I know it's a fancy flag. You could say this right here, if we had it look like this, it would be called a high tight flag, right? Which one of my old colleagues, that was his favorite pattern on the planet, was a high tight flag. And he's like, this is the gift of God, which I've told you that story before. So I think from a short perspective, I will just wait. I think you're most likely going to see this thing break to the upside, which would be getting above, call it 28,500. If we get a close above 28,500, I think you're going to see another bullish move in Bitcoin. If we get down below 26.6, then maybe that's your shorting opportunity. Now, you mentioned a 4-hour time frame. I always like to look at things big time frame first. We'll go down here to your 4-hour. Really, KF, if you look at this, what's it doing? It's really not doing anything. It's just kind of traversing sideways. So I don't think that there's, even when I look at this shorter time frame, it's even less of an inclination for me to want to go short this one. Well, I really see no interest in shorting Bitcoin at all at this moment. So let's talk about something that might be a short. Actually, let me make sure I go through here and get all your questions out of the way. First, you see an opportunity? Got that one for KF. Ivan says, has a market always been so sensitive to economic news? Seems like it's been so sensitive lately. Yeah, I would argue that it has been. Markets are like human beings. There's certain times where a specific event will be much more impactful to you in your life. I guess that's when something in your personal life changes, you might become much more sensitive to a different situation or different event. And I think markets are the same way. I think that there's I always make the point that there's a reaction to economic data that modifies over time. So for example, right now, we all know, and probably getting sick of it, it's inflation, right? Inflation is the dirtiest word in the financial markets right now. But there's other times where it's GDP, and all of a sudden, all people care about is the GDP number, or it's about the unemployment number. So there's this focus on different ones. Right now, I think, I kind of agree with you here, Ivan, that now is a little bit different because in a normal market situation, if you have one bad piece of economic data, the Fed or our government can modify something else and fix that bad piece, right? So for example, in a normal market, let's assume that the GDP has been falling and people are like, oh God, America's losing its power. We need to produce GDP. We got to get GDP back up. Well, what are the steps that the Fed and the government can do to get GDP back up? You stimulate. You use stimulus, right? You print money. You get money out there. You create more jobs. You produce more. You get full employment. Hey, GDP goes up, and you're like, hey, we won. The situation's different now because you can't do that. Right? GDP has been declining. Well, we can't pump more money into the economy to help GDP because that would put us right back in that inflationary environment that we're starting to get out of. So it's this conundrum of the economic data, I guess, smorgasbord, if you will, and how one piece is dramatically impacting the other. Therefore, I agree with you. Now seems to be different because there's so many pieces of data and they're all significant, right? Because the Fed has telegraphed their punches and said, this piece of data is important, right? They've talked about GDP, talked about unemployment, they talked about interest rates, and they talked about inflation. So all of those now are like, what did they say? How are they going to react? So you get a little bit more volatility here. I don't like it because I feel like there's a lack of real clear trend, which is my favorite type of trading market. Mike, there you go. That's the Masters. What else do I got? Flag formation. Yep, sideways. Actually, I see a 4-year halving cycle on a non-log scale. Tom. Actually, I think one of my next articles is going to be about that full flag or full 4-year pattern on Bitcoin for the next article. Maybe I do for barchart.com. That flag looks a bit stretched out, which negates it a flag formation, I think. Correct. So T. Cruz, good point. And when you look at it, like obviously this looks ridiculous, but this is the beauty of trading, right? You look at this picture here. most technicians are going to go, that's not a flag anymore. It's gone too far, right? It's just way out there. So, you know, what do people do? People will, there's no phrase that says, if you torture a chart long enough, it'll tell you whatever you want to hear. So Cruz is right. If you look at this, this is too long. It's gone sideways for too long. On a 4 hour, I would say, nope, not going to work. So what people do is they change their time frame. Now they go back to the day. Now it actually looks, it's okay, but getting a little bit stretched out. So what do? Oh, let's go to the weekly. Now you're like, hallelujah, look at that flag. Look at that thing. That's a perfect flag right there. So, again, torture a chart long enough, it'll tell you whatever you want to hear. 3 weeks worth of sideways, 2 weeks worth of up. You know, either way, I think the way that I present this is the simplest way to interact with it, which is you put constraints around price, whatever market it is that we are looking at, right? So in this case, it's Bitcoin, but this could be anything. You put constraints or use tools that will help you understand the current trajectory of that market. In this case, it's pretty obvious. It's going sideways. Tom over there going, I'm reeling some spreads on this one, right? Just go sideways here. Great. And your rules become very simple. There's no more, well, what should I do here? You have 4 choices. Actually, you have 5 choices, right? There's only 5 possible things that you can do here, and each one has a certain set of risk to it. So let's evaluate these things. Number 1, I could literally do nothing. That's the easy one, right? Just do nothing. Number 2 is I could wait for it to come up to the upper part of this channel and go short the top of that channel, which, hey, if something goes sideways, that's a great strategy. Go short when it hits the top part. The other thing I could do is I could wait for it to get down to the bottom of that sideways channel and go long, right? So I can go long at the highs, long at the lows, short at the highs. Or I could do nothing. Those 3. The other 2 is I could wait for a breakout above that line to go long, or I could wait for a break down below that demand zone and go short. If you got other ones, Margaret, let me know. Yes, we could wait for a breakout and a retest. That would add another one to it. But I'm basically saying you can do nothing. You can go short at the top, long at the bottom, short the breakout down below, or go long the breakout up above. Inside of that, there's all kinds of different strategies you could employ. Yes, you could use iron condors. You could just do specific spread trades here and just collect some premium if it continues to go sideways. So as far as a tradable action on the underlier here, those are the only 5 things that you could possibly do. When you open the can of worms with options, there's a lot of different things you can do and really capitalize on a sideways market. Because if I was to just buy Bitcoin and hold it right now, well, I'm not going to be making any money, but if I did some options against that, I could make money when it goes sideways. Traded demand zone below it, you could. Right, we could be looking at the next lower demand zone, which is going to be, we're going to get my drawing tools on here. All right, let's just call this bad boy right here, which is going to be price-wise between 24,740 and 24,000. Or sorry, 24,740 and 24,000, period. So there you go. Well, and it's, Rob, the point is, I just try to keep it as simple as possible. Right? I think many of you who've been trading a while understand that you start to make things more complicated than they need to be. When I started off, I had tons of indicators on the charts because on the trading floor, one guy was an expert in MACD, one guy was an expert in RSI and CCI and ADX and Bollinger Bands, and one guy was a trend dude. And you take in all those things and you start to incorporate them in. Next thing you know, I'm not making trades because I'm focusing on all these different indicators, which are just derived from price. So when I removed all that stuff from my charts, I found I did much better, and I like this type of visual representation. Again, that's just my way to do it. A lot of you are going to have different methodologies. I would just highly recommend you try to keep it as simple as possible so that you don't spend too much time analyzing and ultimately miss trades that may come your way. All right, time for a sip. All right, Mark says, for gold ETFs, which do you prefer, GLD, IAU, or PHYS? I've never traded PHYS. I've traded IAU. So we can look at those side by side here. And one of the things that I always do is want to put on volume, just so you can see the liquidity of it, right? So today traded 5.09 million shares on the IAU. GLD 6.4. So 6.5, slightly higher than IAU. Now you notice those charts look pretty much the same. No real preference one way or the other. I've just always done GLD because it has slightly more liquidity typically. So other than that, there's no real preference there. And let's go PHYS. And this one, oh, actually, wow. This thing's picked up volume lately. The Sprott, gotta love Jim Sprott. Sprott Capital. Like that. I've interviewed him a few times. Great guy. Maybe I can get it back on. I didn't realize the volume on this one has risen so significantly. Normally, when I was looking at it, it was like 2-3 million, which put on the lower side of these ETFs. So, or ETV. This is an ETV, an exchange traded vehicle. So there you go. I have no real set on that one. I think depending on what you want to do, one thing you can do is look at the open interest on the options as well, because typically if I'm buying GLD or silver, I'm selling options against that position, or I'm selling puts to try to buy gold or silver, and I'm definitely doing that against SLV or GLD are the two that I typically choose. All right, what else did I have for today? This question came in from Philip, and I got to say I don't have a lot of experience with it because they've now kind of made this a new thing, which is stock lending in a retirement account a safe way to earn passive income? So two things here. Number one, the stock lending, they call it secured stock lending. And from my experience in doing this forever, they've always been lending out your stocks. You just don't know about it. You literally fill out in your application that they're allowed to borrow your shares in a margin account, right? We've established that. In a cash account, they're not allowed to borrow your shares. And I don't believe that you can do that in a retirement account. This is lending out your shares. I guess the question is it safe to you to earn a little bit of extra income by allowing your brokerage firm, and there are quite a few that do this, to lend out your shares? I would argue that if you're with a big firm that has a lot of liquidity, then you're probably okay. It's something that they're kind of just rolling out to the mainstream. Again, I feel like they've been doing it for years behind the scenes and making all the money. They may have gotten called out on it, now allowing us to earn a piece of that profit. But I don't think you can do it in a retirement account, but why not earn a couple extra bucks? It's kind of what I do with crypto, is I will lend that cryptocurrency out and earn yield on it. So it should be the same thing with stocks. Maybe stocks took that lesson from the crypto world and decided to give a little extra incentive for you to keep your shares with a specific brokerage firm. So there you go. All right. Sorry, I'm just reading through the comments here. If you got more, keep them coming, because I don't have too much more to talk about here. I guess let's real quickly run through some of the other markets, and then we'll wrap things up, whatever your questions may be. Dollar index really didn't do much today. Again, I'm kind of anticipating there being a bounce. We talked about that as it came into that little yellow zone, which we've had drawn for weeks now. We rallied out of it yesterday. Not the best formation today from a continuation perspective, so we'll see what happens next week with regards to this demand zone on the dollar index. That's the Dixie. If we do get that rally up here, then I think the picture for some of these broader market indexes is going to change, like the S&P, the Dow, the NASDAQ, the Russell, and more downside movement there. AF, what do you want? What do you got? We got a question for me. Send it on in. So there, we already went through the broader indexes. Let's go look at the 10-year here real quick, just so we can see what's been going on with that one. Those yields have been falling. You did have a hammer formation yesterday, and again, it's a good hammer formation because it's at the bottom of a very aggressive downtrend. You see, we've come from 3.6%. We tiptoed into 3.25 here. Excuse me, on that 10-year. So a pretty good decline. What's noteworthy in all of this is we're now starting to make new lows on that 10-year yield, which is a good thing, but it's not going to help the inversion of that yield curve. So here's your, let's go to the 10 and the 2, not the 10 and the 1. We're starting to see it drift back down here a little bit with regard to the inversion. If they keep that short end high and that 10-year starts to drop more, then all of a sudden that yield curve is going to become even more entrenched and even more locked in. So just something to keep an eye out here with regards to the bond market is what that 10-year does, because of course that's going to impact significantly the yield curve. And that was pretty much it from all the things. Oh, you know what? Let's talk about XLU. We talked about this yesterday. Here's XLU continuing its run. You had it smack its head right up against $70 today. Its intraday high was $69.96. Gotta love the mirror image there. What do you call that? A diorama? No, not diorama. Where the front half is the flip of the back half. Anyway, that is called a hanging man formation, which according to Steve Nissen is a reversal formation. I personally think it's actually bullish formation. So we'll wait and see what happens there. If you get a break above 70, notice there's not much above us, right? If you look here, that 70 line is kind of the last ditch effort. You had this huge red candle that formed on the 18th of January. That shot all the way down. So, my expectation would be that if you get a close above 70, then you're probably going to real quickly try to find that next area of supply, which would be about 71.40, somewhere in that area. Obviously, that'd be a pretty nice big pop. It's about a 1.5% move up once you get above $70. So right now, the momentum on utilities is extremely strong. It's the strongest of the 11 major S&P sectors, ripping to the upside, breaking through supply zones, and boy, I'll tell you right now, that target does look like a pretty attractive one at $71.39. All right. You mentioned yesterday about the U.S. pegging stable coins to the dollar. Why is change so slow? My grandparents know how to use all the new apps. Are we willing to adjust? You know, it's a great question. Why is change so slow? It's fear. And I think when you go back through any major innovation, there's fear. Can you imagine if back in 1996, regulators said, shut down all this internet crap. It's dangerous. People are sending pictures of themselves. Could you imagine if someone sent pictures of their private parts to people? This country would fall apart. The morality would disappear. You know, you have those extremists which would want to shut down the internet. And in hindsight, there could be some arguments back in the late 90s that, you know, this might be bad. People could be communicating illegal activity and somebody could get in trouble or could get hurt. Yeah, it could. And it's still relevant today. However, what is the cost benefit of the internet to us today, right? We can access so much more information. I would argue that many people, this is debatable. This is debatable. You guys all gonna laugh at this one. But I would debate that many people are much smarter today because the amount of things they can learn by watching YouTube or going to online colleges, online universities, sharing information, being parts of communities. I'd also argue that a huge portion of the population has gotten dumber and radicalized because they watch all this crap that polarizes them to hate somebody else because of a belief system or what they do. So there's going to be, you know, good and bad to these technologies as they rise. The big challenge here is the internet didn't threaten, per se, businesses other than like AT&T, right? The phone companies. Crypto threatens the entire monetary system. That's a way different beast. And I think that that's where the apprehension is coming in, is saying this threatens central banks. This threatens Chase, Wells Fargo, Bank of America. This threatens Amazon Web Services. This threatens YouTube and Microsoft. And you're going up against some of the biggest people in the world. So if they don't have a controlling interest in this new technology, then they may be losing out. So why is the adoption slow? I think that part of the adoption being slow is ignorance and uneducated politicians. I mean, Elizabeth Warren is a key example of that. She probably just looked at a headline of what happened with Terra Luna, and you had a systemic collapse which lost $40 billion. And then you had Sam Bankman-Fried, who probably donated to Elizabeth Warren's campaign, right? Making $200 million or $200,000 a year, and she's got like, what, $60 million net worth? How long do you have to save up to get that? There's money coming from somewhere in investments for sure. When people are fed misinformation, especially in this day and age, they tend to hold that information as being the absolute truth without doing checks and balances, right? I'll give you one example. One of my former colleagues, he sent me a video once of Barack Obama. And in the video, Barack Obama says, we have to strip away the power of the American people. We cannot let them rise, or we have to strip away the power of our people. We cannot let them rise up. We have to oppress the people. And if you watch that video, like, holy cow, I really can't picture him saying that. So I did some research and come to find out the actual video was of Barack Obama standing there saying, when we look at the Russian government, what they're telling their people is we have to control our people. So you remove that one piece, the Russian government, and now it looks like Obama's this totalitarian dictator. So, you know, trust but verify information that you get because, man, I'll tell you what, if anything, I had a conversation with Larry today. Social media is like the master manipulator. And you have to trust the network that's putting it together. So you got to trust your Instagram, your Facebook, your LinkedIn, all these different media platforms. What are they feeding you, right? How are they? They are definitely facilitating what you want to see, but then they'll radicalize you. That Social Network movie was really great with that, which is why I generally disconnect from social media. The only thing I do on social media now is I post, hey, I've got a guest on the show tomorrow, or we're going to talk about this on the show today. That's pretty much it. I don't want to go down that rabbit hole and be radicalized. I've got enough going on in my brain as well. Don't know that one, Gary. Let's see. What would happen to our economy, GDP, purchasing power, debt, reserve bank ratio if the U.S. becomes no longer the world reserve currency? Pepe, I think maybe what I'll do, because that's been a question that's come up a lot lately. And I have my views on it. And again, to answer all that would take me a long time because there's so many. You have all these dominoes, right? It's all going to be one gigantic systemic effect. If you devalue the dollar because nobody wants the dollar anymore, then what does that happen to our exports, our imports? What does it happen? What happens to our jobs? And then all of a sudden you have unemployment questions, you have GDP questions. So I think that's a great discussion that I'd like to have with somebody like a John O'Donnell. You know, he's more of the Austrian, he's more of a true Austrian. I kind of find myself finding bits of Keynesian economics I like, and I find bits of Austrian economics I like, and you know, my own little mind as the way things should function. So maybe I will bring John on and structure something where we can talk about what happens if the dollar loses its reserve currency status. That's obviously, you know, you heard Trump saying that the dollar is losing its power. That's been happening for some time, I personally think. So this is not anything new. It's just starting to, you're starting to see a lot of these third world countries, if you will. You're seeing some BRICS all of a sudden get more and more powerful. And, you know, dynasties fall, that's for sure. So maybe our reign as the reserve currency is going to stop. It's not the end of the world. You know, if you look, Italy didn't have the reserve currency of the world ever. Well, I guess you could say maybe the Roman Empire did. How about Brazil? Never had the reserve currency of the world status. Their economy is doing all right. You know, it's not the end of the world. It will certainly change some things, but again, it'll take a long time for us to get to that point where we see that happen. Mm-hmm. I agree. I think that'd be a good one because John really gets into the weeds. Sometimes I have to pull him out of those weeds a little bit. There you go. Please say your opinion. That's my dog. Why we need cash? Always need cash. Merlin, is it coincidence that this FedNow program coming after the CEO of Cash App, Mysterio, gets stabbed and killed? Boy, now you're kind of going conspiracy theory. That was kind of a mess. By the way, I was a huge fan of San Francisco. I've always loved San Francisco. That place has turned into a dump. I do not understand what the authorities are doing there. You can commit a crime and they don't hold you, just let you go. So why go to a Louis Vuitton store and buy something when you can literally just walk in, grab stuff, and just run out? And even if they catch you and arrest you, they'll just let you out later on to go back and do it again. Anyway, guy got stabbed. CEO of Cash App, from what I'm reading. I didn't know him personally. Actually, Cameron, who did the CIL with me and still does some for the crypto program for OTA, he was talking about, he used to work for that guy. So it's just a great guy. And everything out there says he's just a really good individual. Is there a conspiracy theory there that says this was kind of in line with that CBDC? I don't know about that. Way beyond my knowledge of the situation, but we are going to see a CBDC. Just get comfortable saying it. We are going to see a central bank digital currency here in the U.S. It's just a question of when. In June, is it July? I think it's July. The plans are to start rolling out the U.S. CBDC, which I'm actually working on a topic for next week to kind of focus on that one, so I won't go into it here. But yeah, CBDC is coming. It's going to be a reality. As I mentioned before, the cost to monitor, manufacture, transfer, secure, destroy, distribute money, physical money, is unbelievably expensive. And what's interesting is here, you look at these government jobs of people who work at the Treasury Department or work at the Mint and are making coins and bills and things like that and storing and destroying all that. All those jobs will be gone in a decade. Gone. There'll be no more printing of money. There'll be no more physical transaction of money. That to me is what the future holds. So I think it will be a big change. I think the CBDC is coming. I don't think that this is a conspiracy theory at all. I just think it's going to be there. Let's see what else we have. Hey, Merlin, have you seen? No, I have not. I usually don't watch other people's media. I don't watch other shows or anything like that. Okay, maybe I could bring John. I wouldn't want to bring John and Bill Addis on the program. John will just cut Bill Addis off all the time. He loves that. Let's see. Walgreens at all close the stores? Yes. If you were a business owner, would you want to stay in San Francisco? I mean, unless I had 2 towers with M16s on a remote control, and I had a guy right behind in a locked box that was just basically, if someone ran out with goods and services, I could just light them up. Why stay in San Francisco? I don't remember the number. It's something like they have a 50% occupancy rate on commercial buildings now. Obviously because of COVID, people working from home, cost of the city. But man, they're shooting themselves. I'm kind of excited about it because I hope that San Francisco runs itself into the ground. It's a mess right now because I would love to move to San Francisco when it finally gets its act together and cleans back up. I love the Bay Area. I think it was July as they're starting to roll out that CBDC, the proposals. Let's see. Do you see any good opportunity for shorting Nvidia around 285 to 289? Man, it's funny, KF. The two you've asked me have been actually really strong securities. Just as a disclaimer, I can't short Nvidia. I can't. I like Nvidia. It's great. To your question though, do you see any good opportunity for shorting Nvidia around the 285 to 289 zone for a short-term swing trade? Well, look where we're at. Again, I got a yellow box on here. It's loosely drawn. Let me bring it down. I don't know why it was up there. I don't even think it needs to get to 285. You might have an opportunity here if it breaks down below this line, which I'm not sure why that line is exactly where it's at. I would do it more to there. Let me put this line up here. For me, if it breaks down below 264, I would say there's your short opportunity, but I would wait for it to commit. Again, AI is going to be the major driver for businesses going forward. And a lot of companies, as you've seen over the past 3 months since ChatGPT blew up on the scene, how many businesses now are an AI company, are getting into AI? It seems like everybody's got to at least attach that to their product description. Well, if they really want to be truly an AI company, it requires consumption of data and processing of an incredible amount of data. The best chip out there is the A100 by Nvidia. It's a $10,000 chip, and they can't even keep them on the shelves because anybody who's doing AI right now, that's the chip that you want. Now, we might get some competition for that in the near future from AMD, from the likes of Intel. They can get their act together because their chart looks awful. But Nvidia is like the only shop in town for the chip that will do what you want with regards to AI. That's what is being stated in the media, and from all the stuff I've read, seems to be pretty good. So imagine if more and more people start to get into AI, Nvidia is going to continue to soar. Their PE ratio is high. I think the last time I looked, it was like 100. Let me check real quick. 100 PE is pretty damn significant, but it's because a lot of people are expecting their numbers to continue to grow with the advancements of AI. Let me bring up this real quick. So here's Nvidia. I thought it was Nvidia. It's not. Go to NVDA. I just want to see what that PE ratio is. I remember it being 115. Right, that's pretty dang high for a PE ratio. But again, it's all expectations about future growth. So I'd be careful shorting Nvidia. I'm bullish on Nvidia long term. Maybe if this thing sells off, I'll be looking to sell some puts here and buy this lower at about 240. I think 240 would be a good spot to buy it at, which is kind of where we had the last little breakout here to the upside. So be careful with that one. I would say if it gets down below 264, you got a short opportunity, but you're also shorting one of the strongest stocks out there. I mean, just this year alone, it's up over 100%. Actually, right around 100%. So be careful with that one. Can you look at AMPB, and shouldn't it be ready for a rebound next week? Let's go AMBP. Well, not that it should be ready for a rebound, right? Bottom line is you've got something that's dying for a reason. If you look back here from February on through just today, a significant decline in value there. Now, I don't know anything about this company, so I can't make any claims about it, but when you look at a decline of 37% in just 2 months, something's wrong with this one, right? Something stinks here with this company. And if I look back even further, boy, you're talking all-time lows for this bad boy. So I don't think that it is technically going to have a bounce here. You can make the argument that, this looks like a double bottom, right? And I think that's probably what you're checking out there, Michael, saying, it's got a double bottom. I don't know. It feels to me like this thing is going to keep on going down. I don't know why or what Argonac metal packaging does, but it just looks bad. And if the fundamentals are that bad, I don't know. They paid a dividend here. It looks like they've missed their earnings the last... they actually made their earnings back in July of 2022, but they've missed every earnings since. Now, I wouldn't take that chance, right? You're right here. You're catching a falling knife or trying to catch a falling knife on something that I guess you got to ask yourself, what's the prognosis for this one for the future? Do you believe in the product? Do you like what they do? Are they making money? Is it going to survive is probably the most important question. Maybe they're just burning through cash so quickly, and you might get that notice in a couple days that, they're going bankrupt, right? That's always a possibility here. This is a gamble trade that personally I wouldn't take it. But there you go. Probably not what you wanted to hear, Michael, but that's how I see it. It's not worth the risk here. It looks like it's going to keep on going down. Do you think these companies like Katie's will do well with the floods that might happen in California. I have no idea. Don't know. Let's go Katie's. I don't know I don't know what Katie's does, so I guess I'm claiming ignorance there. But let's just look at that price chart. Yeah, I don't know what Katie's does. Anyway, from a technical perspective, though, not bad. You've had this really strong rip back up to $5 and kind of traversing sideways. Now, it did dip down over the past week, but today's close brought it kind of right back up into this consolidation between $5, call it $4 and $5. Again, I wouldn't touch it until you get a breakout. Just keep it simple. Personally, though, I don't know this company, so I wouldn't jump on it. You've got fairly low volume. It's averaging, looks to be about less than $1 million a day, a few $100,000 a day, so it's fairly illiquid anyway. So personally, I wouldn't go for it. And BB makes cans, which put in like soda beer and others. Oh, what do you think you're doing? 10 cents dividend each quarter. Well, I'll tell you what, if they keep losing money like this, they're going to stop paying that dividend, right? You know, one way, there's a couple ways that you attract people to buy your shares. You guys tell me, what are the two ways that companies attract people to buy their shares? And there might be more than two, but in my mind, I've got two very clear things that, let's say I ran my own company. I know if I do this, it's going to bring in people that want to buy my shares, and that drives the price up. What are they? I'll give a second here as I have the last little bit of my whiskey. How much time we got? Holy cow! It's happy hour somewhere, folks. The first thing they can do is you drive your price up. And generally when a growth stock is moving to the upside, they don't pay dividends. They keep that money for themselves and reinvest in the company and grow, right? That's the obvious one. Everybody here says dividends. Yeah, yield. You pay people. So remember, as a company, I have two choices. Let's say I'm running, Merlin's Widgets company. If I run Merlin's Widgets company, I have two choices of what to do with my profits. I can either pay it to you as a dividend, or I can keep that knowing that I might pay you, let's say, a 5% yield, but I might be able to invest it in the company and be getting 10, 12, 15% on that, which is going to make you even happier. So I always look at dividends as a way, as a company saying, we don't have great growth potential. We're just kind of consistent here. We're going to stay kind of slowly growing. And for that, to convince you to buy our shares of a stock that's not really going anywhere, here you go. Here's a little bit of dividends payments for you. Some of that earnings is going to come to you. Personally, I would rather get no dividends whatsoever, knowing the company is taking that money and reinvesting it in the company and getting me a much greater rate of return, which instead of having a 5-degree upslope on the chart, makes it a 20-degree upslope on the chart. I'd rather see those kinds of gains. So to me, those are the two ways. You either reinvest in the company and push share price higher, or you pay a dividend. That's how you get people to buy your company. Let's see. Yep, dividends, dividend yields, stock split. Yeah, stock splits, of course. That's always an exciting one. Hopefully a split, not a reverse split, right? Reverse splits don't do anything. Just tell. Ooh, good one, KF. That's funny. How do you get people to buy your stock? You just recommend it on Jim Cramer. How do you get a company to go up? You tell Jim Cramer to tell everybody to sell it. There you go. Lake Tahoe, Jimmy. Man, are you buried in the snow up there, my friend? Oh, man, some of the biggest snowfall on record for California. It's great. We have reservoirs that were almost gone are now full again. It's like, hallelujah, keep it coming. Ironically, we have some of the largest aqueducts in the world, and to transport the water from NorCal to Southern California. But you have a canal that runs through a desert. So what happens to all that water? It evaporates. It just seems like, as a human species, we should be smarter than this. Like, how about we cover the entire aqueduct from NorCal to SoCal to keep that water in there, and when it evaporates, it condenses and drops back into the water. And then how about we put solar panels on top of that entire canal so we generate electricity from this ugly eyesore that rips through our state all the way from top to bottom. Anyway, see what happens? Get a little bit of whiskey, you start ranting over there. All right, let me see. I had one last one. How strong do you think the current supply zone on Microsoft is? Looks like it wants to break through. So let's go over here. Last one, and I'm going to wrap up here. MSFT. Again, beautiful chart. I mean, this is one of the reasons that NASDAQ's soaring, right? This is the heaviest component in the NASDAQ, and it's still keeping that status with its moves today. Now, you look at it, you come right into this overhead supply zone, which rightfully pointed out. I will go in here and go and draw how I would draw it, not how others would draw it. So you're just tiptoeing in. I think if I go to this candle right here, 291.99. So I call it 292 is that line that to me is the, I won't use the terminology because it's not an OTA program, but we'll go 299. Wait, not 299. Dab nabbit. Not 299, it's 292. So that is the entrance of that supply zone. So as you mentioned, you're in it. I mean, today this thing hit 292.08, so just barely tiptoed in. So I think that at this point, Michael, that this could be a good opportunity for a short at the supply zone. Now, if you are taking this one, I like the idea of shorting this. I do. But you got to know you're going counter trend, right? You're going against an incredibly strong run right now, money pouring back in, even in face of this bad economic data. So I personally would be okay taking this trade, but I have my stop loss above that zone, which is going to be a stop loss of about, call it 295. So you got a $3 stop on this bad boy. So trade accordingly. That's a 1% stop, if a little bit, yeah, right on 1% stop loss on it. So there you go. Be careful with that one, but yeah, we were right in supply on this one. After that, this has room to run and a couple of unfilled gaps as well on Microsoft that go all the way back into April of 2022. I'm back a full year. All right, I don't have your economic calendar up for tomorrow, but I did show you the economic calendar for tomorrow. This is what you've got. Again, unemployment rate coming out. That's going to be at 5:30, but no one cares because the markets are going to be closed. Nothing to speak of there. So Monday, things will pick back up. I didn't see anything really exciting about Monday's news. There is some really exciting news happening next Thursday. Thursday at 3, I think it's 3:30 p.m. Pacific time. I think it's 3:30 p.m. There's a pretty major announcement happening here in California, but I'm going to tease you with that one and see what you guys think that might be next week. I'll probably tell you on Tuesday about that news. So there's some really big stuff happening next week. There's some decent economic data as well. Some pretty big announcements. So anyway, that's going to do it for me. Cheers, everybody. I hope you have a fantastic weekend. I know it's Easter out there, so whatever beliefs you have, cheers. I hope it's a wonderful weekend for you and your family. I hope you eat some food, have some fun, and just do something great with your lives because the clock is ticking, my friends. Anyway, have a fantastic remainder of your weekend. If you're working tomorrow, sorry. I'm going to probably be at the beach or the mountains. Haven't figured it out yet. If you have comments, questions, feedback, send them in at TraderMerlin@gmail.com or put them down below any of the YouTube videos, as I see many of you do, and thank you for those comments. I do appreciate it, and I respond to those. I try to respond to all of them. Anyway, take care, everybody. Have a great weekend.